Hey, Franchise Tribe, Eric here with Franchise Secrets. We are going to talk to Eric and Morgan today about what are the options out there and what are the pitfalls with all the different, like the CARE Act and PPP and unemployment and all these things that my tribe has questions with. So guys, welcome to the show and thanks for hopping on to help us all out.
Thanks for having us.
Thank you.
So, Eric, you and I were hanging out, it was probably sometime last year and got to spend a lot of time, did some runs together and you've been in the lending industry, in the consulting industry. And so I wanted to get your perspective on this. And when we talked last week, you were deep diving into all of this. And you and I both said, let's just wait to come on here to let the dust settle. So we had some accurate information to give people. So here we are. Why don't you tell everyone who you are and just a brief background.
Oh yeah, thank you very much. And for the record, I beat Eric on all of those runs, but
it's not
Eric,
true. Absolutely not true. So your credibility just went down fast.
That's all right. That's where it should be. But yeah, so been with Benetrends, started with them in 2011 and was there with them for about 8 years. And then a couple of years ago, took a shot to go be a franchise consultant. Bought my own business, ran the territory, worked with people, placed candidates, and really enjoyed it. But sometimes you always go back to where your heart lies. And Benetrends and the family that I built there, and the team and everything else, there was an opportunity to return back home. And it's funny. I said I missed a little bit of the drama and the chaos. And man, coming back 6 weeks ago to the finance world, I definitely got all that I asked for and more.
Dude, you're drinking from a fire hose right now.
Yeah, so rejoin with them, and as the Chief Development Officer, I essentially run all the marketing and sales efforts. I've got about 12 or 15 salespeople and marketing people that work with franchise consultants, franchisors all throughout the country. And then I'm joined here by Morgan Johns, who runs our SBA department, who works directly with our clients and working with our franchise brands on the SBA side. Morgan, maybe you can, your quick background on the SBA side.
Sure. I came aboard to Benetrends a little over 2 years ago after spending over 25 years in the small business commercial lending with banks and specifically running SBA lending groups from small local de novo banks to large national departments. So kind of the full spectrum of size and types of departments. 2 years ago, had the opportunity to come over to Benetrends and build out the SBA side of the business. My previous life in the bank, we had been working with Benetrends as one of their lenders, and that's where actually Eric and I met many years ago. And like Eric said, kind of comes full circle, and now I'm with Benetrends and handling the SBA side.
Perfect, guys. I want to jump into it. So you guys are clearly experts. And we're going to really talk a little bit later about like why people are moving forward right now in brands doing things the traditional way. They don't own a business now. They're going to own in the future, and they're moving forward and why they're moving forward. So I want to get into that at some point with you guys. But there's some pressing things that I see right now. We've got the disaster loan that people are applying for. And then we've also got the PPP loan, the triple P loan. I don't know what the inside lingo is on all of these yet. So why don't you fill us in on the inside lingo? The question is, can you apply for both at the same time? And then that's the main question. Then we'll dovetail into some probably other questions around that.
Yeah, and I'll have Morgan loop in on some of the details, but I love what you said before, Eric. We spoke last week, and then we figured let's push this till next week until the dust settles. What's crazy is I think the dust is still hovering right here. But what you have is, and I love our industry, and God bless everybody. We are blessed to be an industry of so many experts. Everybody's an expert on this. Everyone's an expert on that. The amount of posts that I see, we know how to do this program that only came out of Congress on Friday. The SBA hasn't even given the standard operating procedures, but trust us, this is what you have to do. From what I understand, and Morgan, you can correct me if I'm wrong, banks are not even accepting applications for the CARES Act yet. I mean, they're hoping to be ready and open for accepting those business loans by the end of this week, but they're still working on what they want their process to be. A lot of the questions that I'm sure your audience has. And then again, yeah, there's that confusion of what is the CARES Act and what is the PPP portion of the CARES Act, because that's what everyone's talking about. And then there's the disaster loan. What's the difference between the two? Can I apply for both? Can I take both? And how that works. So the disaster loan is not something new in our world. The disaster loan program has been around for all types of things that have happened in America, whether it was Katrina, whether it was some other act of God, anything that was unforeseen. So that is something that a client has always been able to do directly through the SBA. That is not where you're going to a bank, you're not going to a lender, you're just going right online, you're going right to the SBA.gov website, and you're submitting what amount of funds you need and the hardship. But Morgan, maybe you could touch on some of the details of just the disaster loan and how that's always been an option for people.
Yeah, as you said, that's the traditional loan that you would have heard about on the news with the natural disasters, and it's typically limited to a particular geographic area that was affected. In my career and maybe in my lifetime, this is the first time I've seen anything that literally, if you are in any of the 50 states, you are considered to be having been adversely affected by the coronavirus. So that's the difference between your typical disaster loan and what we will get into is the CARE Act portion of the relief. The disaster loan, though, again, as Eric said, it's directly with the SBA. There are no banks, no other intermediaries helping you. You go through their process. They have an extensive checklist, which is what I would call your typical SBA process, meaning a lot of documentation on the front end and validation to get approval. And then there's going to be a lot of monitoring of the funds as they're dispersed. They do look for personal guarantees and to take available collateral if it's there.
So how much? Like how much are they going to take? When will they take collateral? Like when has that threshold changed?
No, on the disaster relief loans that we're speaking of, anything over $25,000, which I would assume encompasses 99.9% of those deals, they are going to look for collateral. If the borrower doesn't have it, and they still have a legitimate need for the loan, they will still be approved. In other words, it's not an absolute requirement, but if it's there, they will.
They're going to want it.
Exactly.
Has this disaster loan program changed? Has it always been a 25,000 threshold, or is there anything changed about the standard disaster loan besides it being open up to the entire country right now?
No, not that I'm aware of. That it is the same that it has always been.
Perfect. We all just get to partake in it right now. So there's the disaster loan, and then how long are the terms on that roughly?
They can be up to as long as 30 years. And that's one of the key differences. You'll find, as we discussed, the rates between the CARE Act loans and the disaster loan are really negligible. It's a quarter point. So that really isn't, that's not material at this point, I think, in terms of the urgency. But the terms, you can go up to 30 years because when you go through the disaster relief loan, they're looking to cater it to your ability to repay it, meaning they could set a 7 to 10 year term, but if your history doesn't show that you'd be able to handle that payment currently, then they'll bump that out to 15 or 20 or possibly 30 years. Yep. The idea is they want you to be able to pay it back, but they're not going to force you into a payment that you cannot afford.
Yep. What should people be doing right now with all of the options in front of them? I'm hearing you shouldn't have two applications for the same for these two different loans because you just shouldn't. And you should only do one or the other. Well, there's one that you can do now, and one's not even available to do right now. So there's a lot of confusion out there, and I want to help people know, like today, on the end of March 31st, what advice to the best of your ability would you give now? And I'll tell you what I've done. I've applied for that. Was it the SBA? What's that? Is it the disaster? SBA
Economic
disaster?
Injury Disaster Loan, which
takes
is
10 minutes to
EIDL.
fill out. Yep, EIDL, and I
Yes.
spent 10 minutes filling out that very simple form. And then at the tail end of that, they asked me, "What's your bank account and routing number?" I like it when they ask me that. So they said, "You might get $10,000, whether you're approved or not approved, but it's basically a grant." So can you explain the end of that process? And are they just going to be dropping 10K into my checking account? And I think the answer is we don't know what's going to happen with that yet, but I think there's some things that people either should be applying for that, or maybe it's going to hurt them to apply for that. So can you take that question?
Sure. And I will be very transparent. The SBA disaster loans, because they go directly to the SBA and typically don't include a third-party intermediary such as Benetrends. I don't know all the details, but I will tell you that, to your point, they have streamlined the application. They have done that because of the urgency that I think they understood and adapted. So that's one good thing. The second is that they are, if you show a legitimate need on the front end, they will give you the $10,000. If you end up getting the loan, that will become part of the loan, the total loan proceeds. If you don't qualify for, let's say you somebody applies for 100,000, but they find out they're not eligible because of the SOPs of that particular program, the 10,000 remains as a grant, meaning they will not try and take that back. So they are kind of giving out that quick $10,000 for those that look eligible, because I think, again, they understand that there's a lot of urgency here, and it's kind of like, equivalent to a Band-Aid.
Yep.
So it helps a little, but it's obviously not the long-term solution, is how I would put it.
So that's an option for people to do right now.
Correct.
I would advise people that I know to do that. Is there any harm in applying for that today?
No, there is not. There is not. And here's where I don't want to go too far ahead, but transition to talk about the other program is, if you do end up getting a CARES Act loan, the PPP, Paycheck Protection Program loan, what you had already been dispersed through a disaster loan can be put into the new loan. Meaning, if you asked for 100,000 and you're in the process of that disaster loan, you've been advanced 10,000, just as that quick little injection, the Paycheck Protection Program becomes active, let's just say the end of this week, and you put in an application there and get funded or get approved and ready to fund quickly. The disaster loan, you would have to then pick one or the other.
Yep.
You would either have to wait for the disaster loan to become available or move forward with the PPP loan. And if you do that, then that $10,000 that you had gotten from the disaster loan can be absorbed into the new Paycheck Protection Program.
So in other words, they're
working together in some regards.
Yep. And so right now, if people apply for that disaster loan, it's two things. Let me go back. So I have friends that applied for it over 2 days ago, not yesterday. Yesterday was Monday, March 30th. And that's the first day that Streamline app was online. Before that, it was an application that people said they were spending many, many hours. And I'm like, I don't want to spend many, many hours doing that. I'm just going to wait. I waited, and I was yesterday morning, early afternoon, I put in my application, and it was easy. I did it for several entities. I have friends that did it prior to that, and now they were just waiting, and now they're wondering if they should reapply under the new streamlined process. I would think the answer is yes. I don't know that there is a definitive answer, but what would you think?
I would agree. I would say yes, because at this point, it's a matter of, if I'm in the borrower's sitting in the borrower's seat, I want to get to the program that's going to fund the quickest.
Mm-hmm.
And at this point, we don't know that.
Yep.
So cover your bets by when the Payroll Protection, Paycheck Protection Program comes available, fill that application out, get yourself in front of the bank so that when that comes to the table, they might be able to fund quicker. They may. There's no guarantees, but at least you've covered yourself one way or the other.
So how I
Yes,
see this in
I would
simple
advise
terms,
that.
this is what I would advise. Apply for the EIDL loan and use it as an option. And that is not even a loan. You don't even know what you're going to get. So it does no harm to apply for that. All you're doing is applying, and then you might get a grant, you might get a loan, but at that time you start going after the PPP loan, and then that may be a better option for you. So then you don't do the EIDL and you go with PPP. Is that
Correct.
a pretty simple way to explain it?
That's exactly right. And that's exactly right. And then the EIDL disaster loan just gets canceled. It goes away. And
what happens if
move
you
forward.
did get the $10,000 grant and that did turn into a loan, and so you were qualified, you got the 10,000, that 10,000 rolled up into the loan, and now you want PPP?
Well, then here's where you start to get into a little bit more complexity. If you apply for the PPP and you are approved, you cannot use the proceeds for the same thing as the disaster loan. In other words, you can't double dip. You can't say, I need help with my payroll costs and rent and overhead through the disaster loan relief, and then I apply for the exact same use of proceeds, the exact same loan amount, the exact same kind of breakout of the loan proceeds with the PPP, then you can't do the PPP if you've received the disaster loan.
Yep, makes sense. So EIDL available as of March 30th, Monday, March 30th. Go on, it's 10 minutes to apply. PPP is not ready to apply yet.
Correct.
And once it is ready to apply, you're not going onto a government website to apply for that. They're going to administer that through your local banks, local lenders, or national lenders like Benetrends. Is that accurate?
Yes, in that I would say the first call you make would be to your local bank. If a business already has that relationship with their local bank, whether it's a small local or it's a large national lender, whoever you have that relationship with is the first phone call you should make, and
You
find
should
out
be
if they're
making that
participating.
phone call today.
That is correct.
Don't wait. Make that today.
That is correct.
If you have an SBA loan already, you should be reaching out to your lender today to, number one, not only getting ready for the PPP loan, should already been called them and asking for 3 to 6 months of deferral payments on your current SBA.
Correct.
That's a good point. So I like these action items, and Michael, please take notes on these action items so we can get them out to the franchise tribe. First one, apply for EIDL. Yeah. Second one, if you have an SBA loan today on your business, contact that lender and ask for some relief.
3 to 6 months at least.
3 to 6 months of relief. And this is where I'm bummed because I don't have SBA loans. I have some conventional loans, and so I'm going to have to pay those. But SBA is paying principal and interest for the 3 to 6 months. Is that
correct?
Accurate?
Correct. That is correct.
Michael, that's a huge action item for people to do today. In addition to that, they should be preparing for getting the PPP loan. What do they need? What does the lender think they're going to need to get in line in terms of paperwork for that loan? And then if they're qualified. So those are the two things. What do they need, and are they qualified to be able to administer that loan?
Correct. You want to talk to your bank right away, find out if they're gearing up for this. And most banks have already made that decision because we have conversations with them. I've been having them daily for the past week and a half, and finding out which banks are pivoting. Some are pivoting completely to gear up for the PPP loans, and they are backing off other types of loans that they're entertaining right now because they know they're going to get inundated with this wave of loans once it becomes live. So you want to have that conversation with your bank, again, right away to find out if they can handle it. And if they can, great. Then I would recommend working with them. And if they are not prepared, or it doesn't work out, or you not feel comfortable, then yes, you could use somebody like Benetrends to get yourself in front of banks that will be doing these loans in volume.
Perfect. Michael, Nazim has a question. See if he can come in live and do that. That way, if he has any follow-up and whatnot, I'd love for him to be able to do that. If he can't, then I will, I'll ask that question. So I think we have,
Eric, you have to select Nazim's name, the attendees section, and then you can do it. But since I'm just a panelist, I can't.
oh yeah, you are just a panelist. That is right.
So
Well, I think I'm going to right now show everybody my technical skills, show them off.
so
All
go
right,
to the attendees list,
Nazim, I'm going to you right now. All
and you can
right.
invite him to become a panelist if he wants to use his video.
All
But
right.
you never know
Nazim,
what he says. Nazim might have bedhead and might not want to show it. So
Nazim, are you there?
Yes, I am here actually.
Hey, thanks for that question. Would you
Absolutely.
would you mind asking it?
Sure. There's actually multiple different questions that I had. First of all, thank you guys. Thank you very much for organizing these. These have been very helpful. In times like these, obviously, we need to definitely come together and help each other as much as possible. The questions that I had was, one, I know you mentioned the first thing that everybody should be doing right now immediately is the EDLs, the Economic Injury Disaster Loans. Simple application on SBA's website that everybody can apply. Do we need, if somebody has partnerships in multiple different entities, do we need to apply one per entity? And my research at least tells me that SBA is pulling credit, is expected to pull credit because EIDLs are based on just the applicant's credit. And if that's the case, if somebody's applying for multiple different entities, then will they pull credit on multiple different times for each application? And if that's the case, then that could definitely come back and hurt quite a bit because of so many credit pulls for somebody who owns multiple different entities.
Great question. I wish I would have asked that question before I submitted a bunch of entities. So we'll find out if I rolled the dice right or wrong.
Okay. So the other is.
Hey, we'll go ahead and get that one answered right now by the experts because I'm the guy that rolled the dice and I didn't have the answer. So let's Morgan or Eric, what say you?
I don't know the exact answer to this. My take would be if you apply once for under one entity, they pull your credit. They should have that then on file so that if you appear on a different entity, your information should already be in the system. And it would be, it's not 2 years apart, two different disasters. This is one event within, maybe hours or days of one application to the other. So I would hope, and that's how I will phrase it, I would hope that they would only pull it once. Eric, do you have anything to add to that or not?
No, we're running into this now with the CARES Act. A lot of people are asking, well, we're this type company, and then we've got 2 or 3 other entities underneath that. Do we apply to 3 separate loans for that? And, as Morgan said, if I call 10 banks, I get 10 different answers.
Yeah.
5 of them might say each entity should apply by itself. And then the other 5 will say, you know what, if you apply and you group it all together, we might ask for more detail and then ask for the information on those underneath. So it's one of those things where right now there is no right or wrong way to do it. As long as I believe what Morgan's saying, they're not going to be having the multiple pulls. My guess would be you're going to get your entities funded quicker applied separately.
So here's what I'm doing, Nazim, and here's my thought process for what it's worth. And Eric, if you are able to pull any strings, like talk to Trump or something like that, ask him what he's suggesting on that. Donald, and see what he says. But if you do get some feedback, bring it back into the group. I'd love that, and I can post it in there. But Nazim, here's my thought on that. Government is doing everything that they can to help us business owners, and they know we have a lot of different entities. And if they, because most of them do, and they're not, I would imagine it'll be hit once on the credit. And it wouldn't even surprise me if they remove that at some point, like from if people are getting dinged on their credit, because the last thing that they want is to take people that have really good credit and to pull it down because they're actually getting help from the government. That's my hope, at least. And I think I've have probably 10 different, my name in there somewhere 10 different times. And one of them is even for a nonprofit. So that I'm a board member of. So, so anyway, I'm hoping my good credit doesn't go to bad credit quickly. So yet another follow-up question, Nazim.
Thank you. There was one more follow-up to that, and that was basically, do we know what the amount of the loans, is there any indication of what the amount of the loans for the EIDLs are based on?
I'm not sure what those exactly are. Again, that's determined on a case-by-case basis with an SBA officer that is assigned to the application. And that's where the EIDL, you have to do much more validation and so-called qualification on the front end to show how you've been adversely affected and quantifying it. And that's more of a fluid number on a case-by-case. Whereas with the PPP loans, that's an exact formula. It's formula driven, and that's what it is. And that will kind of put the restraints around how much can be applied for. Whereas the EIDL loan is much broader in its scope, because when there's a natural disaster, again, they're trying to adapt to a very different kind of disaster. But in the past, the disasters have been, to physical structures, to, hard assets that get wiped out and need to be rebuilt quickly, buildings, equipment, things like that. So this is a little different. So with the EIDL loans, I do not know exactly what qualifies or does not qualify at this point.
Perfect. Thank you.
Yeah, thanks, Nazim. Appreciate the questions, man. Michael, you want to bring anybody else in?
Yeah, we have another question from Tim Swackhammer. And Tim, if you want, I can turn on your video here. Ooh,
bring it in. Now, I've heard some pretty, as we bring Tim in here, I've heard some pretty crazy stories of people that have not been used to Zoom these days, all of a sudden coming into Zoom, doing some pretty crazy things that they didn't know about. So, Michael, I don't want that to happen to any of our guests. So just please make sure that doesn't happen.
Tim's microphone is active and he can choose use video. There he is. So perfect.
There we are.
Hey, Tim, how you doing?
Good. Yeah, so my question was really, I'd heard, obviously, there's a bunch of rumors going on with this stuff right now and not a whole lot of fact, but especially on the PPP loans, basically them being at least somewhat contingent on you keeping a set amount of payroll. Whether I've heard 50%, I've heard 80%. People could be laid off and then brought back, or if you laid people off, you're just not going to be eligible. Have you guys heard anything on that regard?
Yeah, so I'll chime in here, and Morgan can correct me where I make my errors. But the Payroll Protection Program, that's what the PPP stands for. The whole idea and the formula to figure out that loan amount is essentially taking 2.5 times your monthly payroll, and then multiplying that, and that's how you get to the loan size. And the reason they came up with that formula is the idea is they want this money used to pay your staff as it is. And I believe the way they do the payroll formula is your probably payroll going back from the last rolling 12 months. And that's how they're going to figure that out. And the reason that has attracted so many people is obviously there's other things that can be added into this loan, but the PPP portion of the loan is essentially going to be forgiven if the business owner shows that that money was used to cover those payroll costs that they said they needed the money for. So I don't believe it's a head count per se or anything else. It's a matter of saying, if I had $30,000 a month in payroll, I'm showing I use this money to cover that payroll and either hiring back employees that I laid off, and that's what I put on here, or keeping the employees that I have. That's why this program is really here to keep the same head count that you've had before the virus situation, and it's allowing you to keep that in place. So I don't believe it's an exact head count. It's a matter of you use this money to keep your staff employed. Morgan, anything you want to add there?
No, that's accurate. That's accurate.
So it doesn't sound like if we had previously laid somebody off, if we use this to bring them back, doesn't sound like there's going to be any penalty because they were in a layoff status or anything like that?
No, they're almost motivating business owners to do that. That's why when they look at the average payroll, they're not saying what was your average payroll for the last 30 days or 60 days. Sure. They're saying for the last 12 months. So if you said, I need this. And for the last 12 months, I had 5 guys versus 6, or I had 6 guys versus 5, and I want to bring that person back. And you reflected it in your payroll. And then you show over that time period of the loan that that's what you use the money to do. That essentially that portion of the loan is going to be forgiven. And that's why this is getting so much attractive, so many questions and attention from the small business owners.
Awesome. Appreciate it. Thank you, guys.
Hey, thanks, Tim. So just to give some perspective on that, I was on a call with a friend of mine, and he was in talking to one of the big, like Bain Capital, one of the big capital investment companies. And I believe that they are, from what I've heard, they have departments that they're setting up so they can put CPAs and attorneys on this to get loans for the companies that they currently have, so they can get those stable, and they can just be even more aggressive as we come out of this into some stability. But there's going to be companies that are limping along. So like my posture in all of this is to get as much of this as I can. If the big boys are going after loans, getting money from the government, I'm a small guy. I want to get as much as I can too, because I'm playing the same game as these big companies, big investment firms like Buffett and Bain Capital. I'm playing on a much smaller level, but I want to be playing the same game that they're doing. And because they know that there's going to be companies that are going to fail. Guys, I've already been talking to them. I'm talking to companies that there's already been one franchisor that has gone bankrupt. Late last week, I'm not going to name any names here, but there's already been one franchisor going bankrupt. I know what's going behind the scenes in some of these franchisors. And that's why it's so important to get involved with the right brand. And it means different things for different people, but you just need to be having the posture of winning in this and using this money to help you win when we come out of this. That's what I'm thinking. So can you guys comment on just how people used to look at loans and credit and everything last month and how they're looking at it this month, or how the government is looking at it this month compared to last month? I mean, it's changed, right?
Listen, I'll give a perfect example of just a personal friend. I mean, Eric, you shared a personal story. I have friends of mine. We're all in group texts and staying connected. And my friend owns an insurance company, and I said, "Hey, Mike, let me know if you need any help. You should be applying for this, CARES Act PPP loan." And he's like, "Well, going to try to carry it with my own cash. Don't want the burden of a loan on me." And hopefully I could say this on the show. I said, you're an idiot. And I think I had
You can say that on the show because we talk like that.
Yeah. I mean, I was like, dude, like you're going under, to your point, Eric, it was, well, I don't want a loan. People do not understand. There's nobody unaffected by this right now. So nobody has to say, well, my business was affected. I mean, let's face it, we're all affected by this.
Mm-hmm.
If you own a business, you should be applying for a PPP loan. And if you're not, to your point, Eric, your competitor or somebody else is, and I'm a big movie guy. Go watch any of the movies that talked about the financial meltdown of 08, 9, and 10. Mm-hmm. In times like this, not to be insensitive, there's always winners.
Mm-hmm.
Go watch The Big Short. People were betting against the economy and figuring out what to do, and there's winners at the end of this. People that are, I remember back when I worked at Cintas for 10 years, my previous company, before I joined Benetrends, and they sort of saw things happening down the road, maybe layoffs needing to happen. So what do you think the smart sales managers and sales directors did the previous 18 months? They went on a hiring craze because they figured, let me load up now, and then when we drop back, I'm still where I need to be. So yeah, I mean, you should be looking to I don't even like the word take advantage. You should be looking to utilize the tools that's in front of you. When all you use is a hammer, everything starts to look like a nail. And if you're sitting there running your business right now and you're just hoping that your hammer gets you through this time, all these other people that are looking at the government, looking at marketing, looking at ways to continue to look and find businesses, people that wait for the economy to rebound and say, I'll start looking for a franchise then. Well, you're going to be getting in line then, because all the smart ones are going to say commercial real estate is going to be more available now. interest rate is the lowest it's been since 2008. Money is cheaper than it's ever been before. And you're going to have these other businesses that are all doing this. You're going to be behind the eight ball. So, yeah, I mean, I would advise anybody to take a look at these PPP programs, the EIDL, but really on the PPP, because Eric, to your point, if you're not, somebody else will be.
Yeah, because and people get caught up on a loan, and this is not there's never been anything like this before. So they may as well call it the government bailout for small business owners, because there's a lot of this will be forgiven, or they could have called it the optional, the forgiveness loan or something, because it is not a traditional loan. Like, you apply for it, you don't have to pay it all back. There are certain parameters that some of this is going to be forgiven. And you're an idiot if you don't take this.
Yeah, I mean, the amount of calls I've had, and I'm sure a lot of your
I'm using your words there, not mine, because I would have never said that like on a podcast or anything.
But I know your audience, you have a lot of multi-unit owners. I mean, if you're a multi-unit owner and you're not looking at this right now, because what's your largest expense? It's payroll. To your point, Eric, it's the reason they called it the Payroll Protection Plan. The government is essentially covering your payroll to help you through this time.
And it's not even to help you. What's the real reason they're doing it? They're so your employees can pay their rent.
Yeah.
And they can buy groceries and do everything that they were normally doing. I mean, the government, it's their fault. It's shut down, and they're doing this as a way to help. So if you guys have any friends out there, I want you to share it with them, bring them into the group. Any franchisees, bring them into the group, because this is the kind of information that we are going to continue to give. I don't want to keep going to anybody has any other questions, but I think we gave people a real actionable plan. I want to look forward now. There are people out there that are going to be listening to this that they might have just bought a franchise, or they're going to in the next 3 to 6 months. What is going on with those folks? Like, I think everything just got better for those guys. Now, if you're in the right brand, in the right industry, and all of that, I'm optimistic about that, in the better employees, better real estate, better terms on financing. So what would you guys say on the financing end of that?
Yeah, I would agree with you there, Eric. And it's not to take hey, we're in the franchise industry, we have to make everything sound good. It's just a reality. I mean, right now.
And hey, Eric, as you do that, feel free to talk about the bad sides of things too, because like, me, I'm completely transparent with the folks. And so anybody that's thinking about getting into franchising right now, most of you have to advise against it, because it's not easy. You have to be able to make some really tough decisions right now. It is not easy. But so I just wanted to say that, so you don't hold back on talking about the disadvantages of stuff.
And I appreciate you bringing that up, because I mean, even at Benetrends, when we get our clients referred to us, if somebody says to me right now, you know what, I'm going to go on hold, I'm not ready to do this just yet, my 401k is a 201k, I'm not ready to do those things. I'm not going to sit back and say, oh, what are you doing? You're going to, I get it. But for the ones that don't ask that, in my experience, from what I have seen from, 2008, 2009, 2010 to now, Morgan brought it up before. Very few franchises, you signing a franchise agreement today and your doors are open tomorrow. So while everyone's home wondering what their next move is, imagine you're looking for a new location. You're getting trained virtually. You're going to be walking into an economy where, what are the biggest challenges? Staffing, real estate. And then if you look at our world, those things are going to be easier to find. And then if you look at our world on finance, the SBA, money is cheaper than it's ever been before. The prime rate is now 3.25. The maximum interest rate on an SBA loan is prime plus 2.75. So you're talking the highest 6% on an SBA loan. That's the lowest it's been in over a decade.
Are there parameters changing on a normal SBA loan, or is it still the same parameters?
I would say they are same but different.
That makes complete sense.
Yeah. Today, Morgan is tied into the banking world, obviously, with all the national lenders. There's a lot of talk about what the SBA hopes to do on future new business loans,
Yeah,
such as
good.
increasing the guarantee, waiving a bunch of fees up front. Morgan, I don't believe that was
That's
all.
enough. I mean, you don't need to get into details on that because we probably don't have all the details on that, but it sounds like things are going to, instead of getting worse and more burdensome for the person applying for the loan, it's going to get better for them. It's swinging in that direction.
Yeah, I mean, but listen, when it comes to the traditional loans, like the SBA side, to your point, Eric, it's not business as usual. We're getting the business in, but as these banks start to get overrun with the care packages, is there a chance that that new business loan might set to the side while they're getting overrun by all these other things? Are there certain industries that some banks have let Morgan and I know, just don't send us a package right now for a concept in this space, and other ones will say, you know what, if no one's taking it, we don't have that in our portfolio, let's do it. The rollover program, securities backed loans. I mean, people are still doing these things.
Let's talk about the rollover program because I mean, people are down probably around 30%, 20 to 30% on average right now. Eric, I've been speaking to people in the last week that their comment was like, oh, I'll do a rollover now, knowing they just lost 30% because I know what it feels like. I knew it was going to go down at some point. I just didn't know when and how hard. And now that they know where it is, it was all fake money anyway, it was, and let's say pulled it out. So, it's all just until you do something with it. It's just a number on your account. We think it's real when it's going up, when you hope it's not real when it's going down. So his comment was, yeah, it's down 30%. I'll take it out and I'll bet on myself now. So what are the different reactions that you see in people to the stuff going up? Because I always talk to people when it's going up, like, no, it's going to go up and I need to keep my money in there because this is how I'm going to get rich, is off of my 401k. So what do you think?
Now you nailed the welcome to my world. You don't want to pull it out because it's going up, and then you don't want to pull it out because it's going down. So what are we going to do with it? And I've always laughed when people look at the rollover and they're like, well, I would never touch that. I'd rather pay cash. I'm like, okay, so you paid taxes on your cash. You can use it for anything in life. And through the rollover program, it's the only way you can access these funds, no tax, no penalty, in order to fund the business. But right now, data is more important than anything. So yeah, for those people that are still moving forward, we're literally interviewing them and getting their feelings. And some of the comments we're hearing is just like what you said. Yeah, it's down, but if I leave it in there hoping that these stocks rebound, what's going to happen? Or if I put it in me, I at least know what's going to happen. Some have said, listen, it might be here today, but what if it's lower next week? This might be the best market I see for the next 3 to 6 months. The other thing I've been hearing a lot about, what people often don't realize, is you don't need to do a rollover day one. And when you do it down the road, you can use the money that you got through the rollover to pay back costs that you put in out of pocket leading up to that point. So someone might say, you know what, I'm not ready to do the rollover today. I'm going to cut a $50,000 check for a franchise fee out of my personal funds, get into the next training, start getting virtually trained, start hiring people, start looking for my site location, complete the rollover 3 to 6 months from now when things hopefully continue to rebound. And then after that rollover is done, have my company essentially reimburse me back for the money I laid out as a pre-incorporation expense. Therefore, you're still accomplishing the same thing, but not delaying, waiting on some unproven thing like the stock market.
That's a good point. We're going to wrap up here in a second. So if you have any last questions about anything that we've discussed today or anything around financing and the government programs, please ask away. Michael, do you have any comments or thoughts, or do you want me to kind of wrap things up, my friend?
I have no comments or thoughts, man.
Nothing unusual there, everyone. Nothing unusual. But guys, thanks for coming on today. I appreciate your friendship, Eric, and getting to know you over the years. And I have a tremendous amount of respect for you. So thanks for taking the time to come in here and to help the tribe out. Morgan, good getting to know you. And thanks for bringing that SBA experience in here. Either of you, do you guys have any parting thoughts of wisdom for all these franchisees?
Morgan, anything you want to wrap up with?
I would just kind of reinforce what you and Eric already said. In the midst of the greatest challenges are some of the greatest opportunities.
Yep, 100%.
Yeah, I would wrap up with, I've been doing this for 10 years, and I'm telling you, understand it's not perfect right now. If you wait for perfect, you'll wonder what's available because
Yeah.
it's going to be the people that still move forward right now. And what a lot of people are not understanding is I think there's a sleeping giant in our industry. That's going to get in the way of that new business owner is people are forgetting about those multi-unit owners.
Mm-hmm.
I own 3 or 4 locations right now. And the reason I haven't opened 4, 5, and 6 is the real estate wasn't there, the staffing wasn't there, the money was too expensive. All those things go away. So you might think, I'll wait to buy my franchise. And then you come in 6 months from now, I'm ready to move forward. And they say, sorry, one of our multi-unit owners picked up that territory. It's not available anymore. Do not wait.
That's an excellent point, because there are people like me that are already planning for this. And there's people like me everywhere out there that own some units, and they have been going slow. I've been growing slow. And Michael hears me, and I told Michael owns a franchise. I'm like, go slow. There's no reason to just scale when everything is expensive. I said, things will change. And I didn't know this was coming. I didn't know it would happen this fast, but oh my gosh, things sped up so fast. Labor changed overnight, real estate changed overnight, and lending changed overnight. The people are going to get crushed, and there are people that are going to pick up the pieces from those that get crushed, and they're not going to do it in an unethical, the good people are not going to do it in an unethical way. They're not going to take advantage of people and kick them when they're down. It's really helping them get out, and that will happen. New franchisees that just came in, I think they're in some of the best spots right now. They don't have anything open. They just bought their franchise, or they're going to buy their franchise in the middle of all this chaos. They've got time. They've got the franchisors are going to be more gracious. They're going to be happy that they came in during this time, and they're going to, like you said, be able to go through training, get to know existing franchisees throughout this whole process. My advice would be, don't buy a bunch of territories. Buy 1 or 2 or 3. Buy less than you want to buy, because you will have opportunity to buy other people out, whether it's unopened territories or buy out existing operations. So that's my last bits of wisdom. Eric, if you don't have anything else, I'm going to wrap it up.
All good, sir. It's all yours.
All right, guys. So thanks for listening to this. Please invite your friends to the Franchise Tribe. It's on Facebook. Just go to franchisetribe.com. It's a group that we have just for franchisees to have conversations like this.